Welcome to TheoTrade. This is Don Kaufman. May 3rd, 2024. Just 25 minutes to go in this week of trade. And what a week it's been. It has been extraordinarily volatile. I mean, we've had a Fed announcement, we've had economic data, obviously the jobs number today. But hey, look, bottom line, traders, they are just delusional if they think that this bad jobs report is going to be good for markets. Of course, that and much more here on this TheoTrade weekend update. So allow me to begin with the fact that the S&P futures are up some 65 handles. You ask, well, why? Now, two factors that are actually driving markets in particular today. Number one, of course, Apple, right? So I'll mention a little bit about Apple because yesterday, of course, after the close, Apple comes out. Earnings were not necessarily good. In fact, they're showing, revenue declines, but that's okay. They're going to buy back $110 billion worth of stock. So when all else fails and nobody else will buy your crap, buy your own crap. Anyway, the market, they loved it. The market actually bid up specifically on there. But I got to tell you, the bid, it wasn't that magnificent. No, the magnificent bid under the marketplace, of course, came this morning by way of a jobs number that wasn't that good. Now, again, it's just, wild scenario after wild scenario. But yes, we're still in the notion that bad is so very good. So a jobs number came out. It missed expectations. The non-farm payrolls, 175,000, 240,000 was the estimate. The marketplace spiked up, and volatility right then and there, vol got sucked out. That's actually what I was talking about here it was just a giant volatility vacuum. I will say one thing I am really surprised about is the big crush down in volatility. More on that in just a moment. Overall, even though we see this it's a ripping rally, right? Let's go to the SPX briefly. And the reason I'm going to the SPX is I want to show you kind of the week at large. And the week at large, what did we really do this week? Well, this center line that I'm highlighting right now, that inside of the SPX is 5,100. So again, that's the 5,100 mark. Where are we right now? Oh, 5,132. So net on the week, we're higher, but marginally higher on the entire week. So I know that a lot of people are looking at this rally. They're like, that's it. We're going to rally. It's going to be all-time highs. It is over, people. But at the exact same time, it's a little bit of a comeback play. But again, you're seeing the marketplace marginally higher. I mean, 30 points to me, that's as close to massively unchanged as we're going to get. Nevertheless, though, when I was talking a bit ago, just how wild the volatility was this week, and again, we'll look at this, it's an $82 expected move in the week. For those of you unfamiliar with expected move, you get familiar with it. Expected move basically is the option marketplace handicapping forward risk. And this week, okay, we're looking again, right in the middle of the screen that I'm highlighting. That was the beginning of the week, which once again was right smack at 5,100. $82 higher, $82 lower, right? Wild week. On Tuesday, I mean, we sold off some like 90 handles. On Wednesday during the Fed, we had rallied all the way back from the lower edge of the expected move, all the way back, and then landed on the lower edge of the expected move into the close. Then on Thursday, a little bit of a bid back, okay, into the marketplace. And of course, on this Friday, it's bid back onto the marketplace. But again, the surprising aspect is how steep the volatility crush happened to in fact be. And the only way I can look at this is like, wow, volatility got sucked out like a vacuum. But I'm not sure it necessarily sounds the all clear. Now, again, to look around the market for a moment, and I'm going to detail this again when I talk about the rebound in this marketplace, it's been all tech. It's all tech. Like if you look at this from an auto expected move this week, okay, the QQQ is what rebounded, period, right? Look around, like the financials, they're still lower on the week. You want to talk about the energy sector. The energy sector got absolutely annihilated this week. What else you got? If you go to look at individual stocks, all right, you got me here. Costco, upper edge of the expected move. Generally speaking, though, you look at stuff like Walmart. okay, down on the week. And again, I'm just jumping around a little bit because I wanted to deliver to you something that you can't necessarily just see by looking at the futures. Some people just like, let me look at the S&Ps at the end of the week. Well, if you look at the S&Ps at the end of the week, you're going to see it's kind of a, if you just looked at the S&Ps, it's like, oh, it's kind of a dull week. It was anything but a dull week. It was wild volatility throughout the course of the week, followed by a rip your face off rally into the end of the week. Again, on bad jobs number. And, lately I haven't been, talking about, good is bad and bad is good in the marketplace because we just haven't seen that much activity. But this is the first print that's really come out from non-farm payrolls in umpteen, months that has been really, truly a print that it wasn't really that bad, but bad enough to the marketplace rallied. And again, I just think it's complete delusional on behalf of the marketplace to actually rally in there. So as I was saying, one of the surprising aspects about markets was volatility crushed much further than I would have anticipated it to. And in light of that, it's just, look, my belief at this point, if you look at the spiders, this is just an area we've been in, and we've been in a considerable period of time, right? So pretty good sell-off, the bid back to the marketplace. This is just well-traveled territory, okay? And I feel like the market is probably comfortable in this area, hence a bit of a volatility crush. But again, I'm still really suspect. And I'm looking at the volatility futures. Those as well backed off more than I would have thought. And it's rare that I am surprised, okay, by markets. And like VVIX, VVIX, it's one of the lowest points. It's like, take off your hedges. We're all going to live. But at the exact same time that I'm saying this about volatility and like volatility getting sucked out, it's the volatility vacuum. And again, this is a VVIX volatility, the volatility index, right? At the exact same time I'm saying that, then all of a sudden I look over at aspects like dollar. Okay, and if we do take a look at the U.S. dollar, it got pummeled the last 3 trading sessions, which is also indicative of some risk abating in the marketplace. But I am a little bit concerned because the jobs number comes out, all right, the dollar gets pummeled and then actually rebounds. And again, a little bit disconcerting on the front of the dollar. There could be opportunity for those of you that do trade some of the currency products to actually be long dollar and look for us to retrench back up above 106, even 106.5 before actually breaking out to the upside. Again, if you want to know my feeling on dollar, still extraordinarily bullish on dollar for the time being, given the fact that we're looking at a much more grim economic picture. After all, the jobs number is what? Okay, it's not good. On that particular front, I also see an opportunity in the bond market. The bond market has been in the midst of some pretty strong sell-side activity. This is a bid back. Again, the last 3 trading sessions, we saw the dollar down, and then we see bonds up. Okay, and with bonds up, I think it's actually a relatively decent time to short it. However, that being said, I'm actually going to wait into the trading session on Monday. Like, look, there's not a big economic drop coming early next week. In fact, it's always worth mentioning, you got to keep an eye on your calendar on a week-to-week basis. But like Monday is not exactly like, an economic fun fest that this past week has been. We had all kinds of economic bombs coming out throughout the course of this past week. The Fed, the unemployment situation, just went on and on and on. But like Monday, there's no real economic news, so there's no catalyst. So my feeling is that on Monday, you could probably see a bit of follow through to the upside. Again, I'm going to be very forthright in saying I'm looking for a shortable opportunity specifically inside of the TLT. And if you look at the TLT in terms of auto expected moves, TLT hits the upper edge of the expected move coming into Monday, Tuesday, looking for it to hit the upper edge of the expected move next week. Again, possibly come in for a short, maybe an in-out spread, a bearish in-out spread, something along those lines. But that, again, I don't look at this as like, oh, the bonds are going to rally back because we had bad news. The bonds are rallying back, but I do believe it's going to be temporary because some of the data that's coming out here can just rock the market again. It's amazing. One jobs number, okay? And immediately The marketplace, it's like the dollar backs off, but minimally. The bond market's rallying, but the one that kills me the most, markets, after today's non-farm payrolls, they're pricing in rate cuts again. That's the delusional area of this entire marketplace. And check this out, because I'm going to tell you right now, this does absolutely unequivocally translate to the marketplace. So I'm actually going to take you, this is the FedWatch tool, And if you've never looked at these probabilities before, a lot of people look at the probabilities and they don't get. The probabilities are based on real markets. They're based on Fed fund futures, meaning that this is a tradable, tangible market. Probabilities, like if you look at this, this is the June 12th meeting. Okay, so the next meeting comes up June 12th, just over a month from now. Oh, all right, there's about a 92% chance that they're not going to cut. You start looking out to July. Okay, July. Now that's just insane. It's insane because July just the other day was what? Yeah, it's like 90% probability. There's only a 60% chance that they're not going to cut. So the odds of a cut are starting to increase. When you go to September, you realize that September right now, they're pricing in a rate cut. You're like, what? Okay, one bad number and all of a sudden, okay, all the hopium in the world. Look at this. By November, it's all but assured there's going to be a rate cut. And we've been through this by December. Okay, by December, you're going to love this. Now we're starting to price in like, oh yeah, the highest probability is 2 cuts by December. Okay, I don't know what the marketplace is smoking, but surely, okay, everybody's going to want some of it. Anyway, with this being said, you realize that if the Fed fund futures are right, if those probabilities are right, then the economic situation is considerably worse. Okay, now with that being said, and I so rarely do this on a weekend update, I try to be as objective as I possibly can, but there is one aspect, and I'll give you opinion where opinion is needed, like in the bond market where I'm looking for a short, or the dollar where I'm looking for a long in here. But there's one aspect that I really wanted to add into this weekend's update that I found incredibly insightful. And I was talking about it on Wednesday night's video, but I want to reiterate it today because at this point, I'm looking at the Fed fund futures, okay? And I'm like, oh, they're delusional. And then I'm thinking to myself, did anyone listen to the conference calls, okay, this past week from major CEOs and CFOs? And the answer is, of course not. Nobody actually listens to that garbage. All right, there might be a few of you, but you should just lie and tell me you haven't because it's garbage. But I'm actually going to bring up a couple of quotes here. All right, Amazon CEO, okay? What do we have here? As the results show, okay, customers are shopping but remain cautious, trading down on price when they can and seeking out deals. Again, that's the Amazon CEO. Now, Amazon still rallied, but that's related to their cloud business. Consumers getting killed. Restaurant brand CEO, I'd like to address the consumer environment. As we all have seen, sales across the restaurant industry have been slowing for a few quarters. In our own data, we've seen customers become a bit more sensitive to price, resulting in moderating check growth. McDonald's CEO, 4 months into the year, okay, and again, McDonald's, we're a restaurant, but I tried to get a little spectrum here. So Amazon, obviously in retail, restaurant brands, McDonald's, similar business over here, 4 months into the year. I think that we can say clearly 2024 isn't going to be a typical year for the broader industry. I say that because we're certainly seeing, as you heard in our upfront remarks, that macro headwinds have been more significant than I think we even anticipated in the coming year. Last but not least, Starbucks. If you saw Starbucks this week, got absolutely killed in this environment. Okay, many customers are being more exacting about where and how they choose to spend their money, particularly with stimulus savings mostly spent. I thought you guys would find that interesting because those are literally quotes from that. And I never typically do that, in some weekend update. But that's why I'm saying, if you think that bad jobs report's good for the marketplace, you got to be delusional because earnings growth, it's not there. What is carrying the market right now? Well, we go back to it's all tech, okay? Earnings and considerable economic concerns are going to be on the horizon. It's all tech and nothing but tech. As I already displayed to you this week in particular, in auto expected moves, you see the financials are down. As I reiterated earlier, the energy sector absolutely kind of decimated over there. The energy sector at this point, you're like, oh, that's geopolitical risk abating, or it's global slowdown. Okay, you pick. Could be a global slowdown being priced in because as we actually saw the energy sector get hammered out there, this was happening prior to the marketplace even rallying back up. So some wild concerns right now. The energy sector is clearly signaling something. This is a significant decline. You were just up the other day by 16% year-to-date basis, now up 9%, not in full-blown corrective territory, but most definitively on the way. When I say it's all tech in terms of the rebound, again, I'm going to bring up auto expected moves, take you through some of the usual suspects. Taking a look at Microsoft. Here's ironic. Microsoft ends this week completely flat. Okay. Obviously, Apple with earnings shatters their expected move to the upside. This day belongs to Apple, belongs to the jobs number. Amazon, okay, Amazon, upper edge of the expected move. Google is interesting because Google faded and is actually down this week to the lower edge of the expected move. We actually come into Meta towards the upper edge of the expected move. And of course, Tesla outside the upper edge of the expected move on news, and NVIDIA. NVIDIA makes the comeback here and actually carries the marketplace, right? But ends the week massively unchanged. So before you get too far ahead of yourself, yeah, Apple earnings definitely had a significant impact to the NASDAQ, okay? But the rebound on this week's trade is all tech and nothing but tech. And that's why I'm saying be very, very suspect. And by the way, tech, when it comes to economic news and bad economic news, tech is often last to know. There's no question when you start looking at stocks like Starbucks, which got just annihilated this week. Yeah, that chart's right. I mean, you're all the way down here at the 73 handle. Starbucks, okay, the reason I look at this stuff is, look, you can have a detachment from Main Street to Wall Street, and that detachment can last for a significant period of time. Just the sheer number, though, okay, of CEOs coming out and talking about, okay, considerable risks. The thing you have to realize, it is going to be felt last inside of tech, which, if you're actually fairly sharp, could really produce some of the best opportunities specific to tech. And that's the kind of trades we're going to be looking for in the very near future. Again, as I said earlier, traders just delusional if they think that that bad jobs number is anything but, well, bad. In the near term, it might be a pop to the marketplace. It may crush volatility. But you got some issues out there as we start to price in rate cuts. And now I'm actually thinking to myself, wow, this marketplace, it sees a lot more than just a bad jobs number. Okay, it sees serious economic concerns possibly ahead that would, in fact, warrant a rate cut. Last but definitely not least, as we do each and every week here at TheoTrade, to bring up expected move. Now, I already talked to you a little bit about expected move, which in this past week of trade is $82. And I'm just going to reiterate something. This last week, we have this $82 expected move, right? And we went, down hard, all the way back up, sold back off, just a wild week of volatility. And one of the things that really shocks me is that moving forward into next week of trade, look 7 days out, okay? Look 7 days out. Where is the expected move presently? Now, this expected move, it's not settled out yet. Why? Because the market's not closed yet, but we're looking next week somewhere near plus or minus approximately $63. People, you got to have more questions than that than anything. Why? Because today, in one trading session, we've moved more than that. Last week, on Tuesday, we were down 90 handles in one day. Okay, Wednesday was wild. We had a 100 handle range in the S&Ps on Wednesday alone. As I said, volatility just got sucked out like a vacuum. You have got to be incredibly careful. Those thinking they can sell options premium, short duration, you're going to get annihilated. Look, when I say this, look at May 6th. It's only pricing in a $28 move. Crazy stuff. Why? You got a $65 move, right? If you look back at this past week, okay, there was only one trading session that was kind of mundane. Every other trading session was actually met with wild volatility. And the reason that I keep pointing this out, in the short duration over here, these volatilities are way too low. You're going to get crushed. You look further out in time, there's some premium to sell out there, but the short duration, volatility has been sucked out. You're in a volatility vacuum right now. Look, let the opportunities come to us. Markets have actually bounced, but overall, we're just finishing the week marginally higher. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.